Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, January 23rd. Michael Boutros with you on the wire. Hey, Patrick, great to see you, sir. Pete, Pooja, Iman, good morning to everyone in the room. Here to wrap up the week. So, DXY is kind of boring. Not really much going on there, but we'll hit it real quick. Euro, sterling, dollar CAD pushing into 31.80s, that region, big resistance. Dollar Swiss, Aussie will obviously hit gold. And I also have on here dollar, or Kiwi dollar rather, and dollar yen. So we'll take a look at the abominations finally coming off there from the highs. Any other questions or trade setups, guys? As always, feel free to throw them on the message board. Hey, man, good morning to you as well. So here's what DXY looked like into the start of the week. You know, it's the same setup. We were coming into big resistance. We talked about 97.71, the technical significance of that level. We pushed it into the upper parallel. It's still sitting right there. Here's the DXY setup right now. So there's not really much to update here, guys. The weekly opening range is intact heading into the Thursday open, something that's always going to be helpful for us. So obviously weakness or strength above 97.71 is going to open the top up. But I would caution you on the downside. Even if we break the weekly opening range lows, which is right around 97.42, if I'm not mistaken, 97.40, 97.39. Even if we break that low, watch this zone here. It's the 618 of the near-term advance off last week's low. It's the 100 off the high. So if it's corrective, that's where you would expect to find support. And it's the long-dated 618 that we've been following here from the advance off the lows we made back in June. So decent pivot in price, slope support, 100% extension, Fibonacci considerations, 618s right down there, all give you 97.30 to 97.35. So that's sort of my issue, near term with the dollar. I'm gonna clean this up a bit. You know, the breakout happened, we went to topside resistance, you know, all things held constant. Looking at this, 60s holding resistance and momentum since the high that was registered back in October. These are all things that suggest there's still the broader downside pressures to the downside. Here's the XY on the weekly chart, just as a reminder. Okay, technically, we never closed a week above that slope. We're there right now, okay, but we're on the precipice. Momentum right at former trigger support, now resistance. The index is loaded here, okay? It's just too it's too contentious. This could go either way, okay? So for the weekly chart, or for the daily chart rather, remember 97.87 is really the breakout. Above 97.87, we're looking higher in the dollar. Not our favorite scenario, right? But that's the implications of a break above 97.87. Near term, we're looking for failure on anything ahead of 97.71. Big level of support to look for the big pivot is going to be at that 97.30 region. I want to see what happens here. If we buckle below this, we're right on track. Everything's good to go. And at that point, you know, a slope you may want to consider is something like this. I was looking at this earlier today. Didn't want to tack it on there just yet because we don't really have that downside confirmation just yet. But certainly, if we were to break 97.35, 97.30s, look to use that slope for some guidance here on a move lower in the dollar. Any questions on DXY? Now, taking into account the conversation we just had, if you look at the euro dollar, that's still holding a critical support barrier. Here's what euro dollar looked like yesterday. So the level in focus, you guys all know this level was 110.97 into 110.79, dyslexic this morning, 110.80 into 110.91. A nice, you know, 12 pip, 11 pip range. We dribbled below it just a bit, okay, but it didn't close. Here's what the daily chart looks like. It didn't close. And in fact, you actually got a pretty decent rebound into the close of the session. So my idea last night was to, you know, maintain a rally towards 111.10 is your first target. 111.09 is a basic 38.2 of the drop. But really the big level is still going to be 111.35, 111.33. That's a 618 of the drop, a 38.2 of the larger decline. So basically the entire 2020 range so far. And then you start to see some upslope there as well on the daily chart. So the levels are good. It's all against 110.80. Now, to be fair, the wick that you dropped here below 110.80, look what happened on the daily chart. The broader slope we've been following, okay, the modified pitchfork off the lows from last year, the lower parallel literally like pips away. But on a closed basis, 110.80 was respected, right? You want to pay attention to these things, these little subtleties in price action. So here's 111.10. You're getting a little kickback here, maybe a little bit consolidation. That's the breakout zone near term to get us the next rally. So if you're holding longs, Iman says, still in my long euro at 110.80. Nice entry. Okay, yeah, right. That was the level. Iman, you nailed it. Right on. Perfect entry. You had a couple of opportunities. So 111.10, that's the first level that we highlighted. Watch for a reaction here. Again, ideal scenario, favorite scenario, you get a pop in US trade and you get that move towards 111.35. Anything sub 110.80 at this point becomes high risk, right? So on a trade like yours, man, I mean, it's pretty tight already, but break even, if not take a little off if you get another stretch into 111. But anything below this now would basically be nullified as far as the long side is concerned. One other thing I'd say is that likening this to the DXY, the weekly opening range is still in play. Here's your Monday open. You set a Tuesday high. Yesterday, whatever you want to call that, you're still within the weekly opening range. So if we clear 111.18s, essentially, that in and of itself would be a near-term long bias to the upside. Okay. That level held. It was tested since 2 weeks ago. Yeah, I mean, it's a huge level. We've been watching this for quite some time. Absolutely. Back on January 10th, when we dropped, that's exactly where the wick found support. It's 100 off the high, 618 off the low. You guys know that's my favorite Fibonacci confluence. I'm usually involved. Okay, let's just say that if I see a decent 61800 confluence region, I love those trades. Not to mention, in and of itself, look at the crosshair to the left here. Oop, on the daily chart. In and of itself, price has been pretty rock star here. Multiple lows, highs, pivots, breaks, and accelerated runs, lows. And again, when you're doing this kind of analysis, you want to take this into a line chart, really focus more so on where the closes happened. And you can see my crosshair right there, low, acceleration, acceleration, high, high, acceleration, low, low, all in this zone. So that's all to say, it would be a nice spot to find some support. Let's see if it materializes. Weakness below 110.80, and you're looking for a big drop. Okay, first targets would be 110.40, but you're essentially, risking like 110.20s here for equal 2 legs down. Now again, ECB and all that good stuff. So keep your eyes on the wires. We'll keep you updated. Don't forget on all the dollar crosses, we do have the Fed on tap next week. So things are getting interesting with all these majors at key pivot levels. It's also my favorite level as it did me a fortune last time. Well, good lucky, man. I do like it. And you have well-defined risk on this one. Let's see if we can't get some Momo to push this up. Hopefully Draghi doesn't say something stupid. Okay, so that is DXY and Euro. Any questions on either of those? Number 1 and 2. Sterling, number 3. So, breakout in the pound, finally getting the rally we were looking for, loving it. That rally already at initial resistance, and we highlighted this yesterday on Daily Effects as well. Here's the daily chart, okay, and here's the daily chart now. Simple 618, nothing fancy, okay, but the degree of which it's stretched and the near-term focus of the structure puts you at resistance. So near term, yeah, I want to fade a rally. I want to fade a pullback rather. But near term, I do, caution the long side immediately from here. So the level in question is the 131.58. It's the 618 of the yearly rate of the drop, from the late December high. So this the reference points right here. So yeah, you could get a little kickback, but a breach above this, you're looking for the monthly open, yearly open, 132.53. And then you have the 618 retracement of the broader drop from last year's high at 132.82. So big zones on the upside if this breaches. Near-term support, I told you guys to stay constructive against yesterday's low. Yesterday's low now converges essentially on this slope series. You got a pitchfork here, which we've been following for a couple of weeks now. Again, really nice. But even if you were to take a basic trendline support off the lows, you got another tag here. You got to hold, hold, hold. That's all right down there, just below yesterday's low. So that's the idea of kind of trying to stay constructive all above yesterday's low, looking for a pullback, stretch higher, takes you towards that 3250, 3280 target. Here's what it looks like on the intraday. Who knew, right? Who knew that slope was going to hold in such a fashion? It's the same slope that we've been following on Sterling. Here's what it looks like. Okay, from last week. Just missed the upper parallel on that stretch. Here's the pullback, found support into the open of the week. And here's the rally through 100 off the low, 618 off the high. Same setup, 131.57. And we haven't quite clipped it, but it further highlights the technical significance of this zone. Okay, add to that, okay, throw some sugar on top. You got the upper parallel. Resistance converges on that all throughout today. Okay, so look, near-term support 131.18, that hasn't changed. It's just the 50, but it's also the former swing high that we made last week. You also have the 75% line in there as well. Watch that. If it gives out, look for the bigger downside play. You're looking for slope at this point. I think yesterday I quoted 130.80. 130.80. You want to choke that up just a little bit, guys. I'd be more inclined to work with this swing high that we made earlier in the week, 130.84. But you get the picture, right? And here's yesterday's low. That's bullish inval. Okay, 129.90, that's the same level we've been talking about for months. That's the one that we kind of attempted to break last week and then early this week. A break below that, your bullish inval is here, but a break below that's really just solidifying a 29 move. Again, not the favorite scenario, but right now, look for a move towards the median line. Look to fade a weaker pullback, breach above 31.57. That confluence region of Fibonacci resistance and slope is needed to set off the next leg towards 32. All right. I like the pound on the upside. I just think it's a little tired here. I don't foresee that we'll get that big of a pullback, to be quite frank, just from the way this thing has been popping off. So be attentive on the pullbacks, especially as you get towards that median line or that former swing high from earlier in the week, 30.80s. Any questions on Sterling? With the whole Brexit thing calming down, clarity, Boris Johnson's deal kind of passed yesterday. Like, I don't foresee, or let me put it this way, I do foresee that we'll probably see a lot of chop here in the meantime for Sterling. After a move like this, could see a little bit more lateral sideways, back and forth, but the broader picture still keeps us constructive. There is a bigger pullback towards 29. It's going to buckle below this this formation, so just keep your eye on that. All right, number 4, dollar CAD. Here's Looney. Fireworks yesterday. Was looking for a bigger pullback to try to get involved here. We didn't get it. We stretched higher into overnight trade, and here's 31.84 just higher, which is a major critical resistance zone in dollar CAD. Here's what it looked like last night. So if you guys recall the previous update, we were looking at this consolidation, near-term consolidation in dollar CAD. It was like a wedge formation. What happened yesterday? It broke higher, failed, tanked, and what caught support? That same slope caught support literally to the pip before reversing right through, took out 31.05, took out 31.34. We're looking for that stretch towards 31.84. I'm sorry, 31.40. Here's 31.84, right? Yesterday, there it was, same slope. Broke higher, failed, took the low out. There we caught it and ripped and ripped. Now, Former slope support, which is why I tell you guys sometimes it's just worth it to leave these on, held as resistance, and then we closed back below 31.34. That to me was an indication that there was a risk for exhaustion. You see this? We popped through, but then we closed below the 50%. We closed below, we closed in that zone essentially, 31.34 into 31.40. And it looked a little tired as momentum was testing 60. It was looking for a pullback 31 and 30 into 30.92. This is where I want to see if I can get an entry. Didn't get it, right? It did slide a little bit lower, but it held this zone. And here we are trading just below 31.84. Boom. So look, at this point, if you're not on the long side, there's nothing to do. Okay, you're chasing. If you're looking for an exhaustive trade, you're looking to play the counter trade or the fade, 31.84 is the level to look for. If we get a spike through that, or if we get a push into that and failure on the pullback, that's where your stop is. Just look for a near-term play towards 31.40. But there's nothing to do right here. You're right in the middle of the range. The key zone right now, the focus is right here. So you're slap in the middle. Nothing to do. Okay? It's either a stretch and failure into 31.84, 31.90s, or if you do get the pullback, this is still the zone to keep an eye on, for the possible rebound play. Also take into account, once we made that low, this slope that we added in yesterday's report, basic slope off the lows, took a parallel of that, extended it off the high that we made back on January 2nd. Look where that level converges. Same zone. Same zone. So I just love the setup. I just don't like where price is in the setup. Okay, so I want to get a closer move towards 31.80 right now, to look for an exhaustive trade if we're going to get it. If we get the breakdown, again, I'm not going to just sit there and try to just fade this per se, but look for reaction at 31.40. Below 31.40, I still think, again, you get that drop and the opportunity to get long. But this is a big zone. And again, just to remind you guys what 31.84 is, 100 off the low, 618 off the high. Big zone. Big zone. How many examples of this did we run through today? All right, so the levels are clear. Keep your eyes on this one. Keep your eyes on this one. All right. Last but not least from last night's update was dollar Swiss. Here's what good old Swissy looks like. Levels are pretty clean. I kind of reworked this for a while. I spent a good amount of time with this yesterday. Here's what the dollar Swiss levels look like. We'll start off with the weekly chart, the daily chart. The weekly chart really doesn't have much to look at here. Here's the focus. So the rally failed just pips ahead of the median line of this formation we've been following from the highs that we made late last year in October and November. Really nice as far as the gradient, the wicks on the downside, like just very clean, right? Here's the failure ahead of the median line, the pullback. This is a big zone still, okay? Last year's August low gives you 96.71. You have the 618 extension of the drop off the highs that we made in last year. Again, 2019 high, boom, 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 618. You have a whole bunch of wicks in this zone, okay? And the low close for the year, which is 96.40. Though this is the key, sort of two key pivot targets, 96.71, 96.72, or excuse me, 96.60 into 96.72 and 96.40. If we clear the downside, you're looking for resumption, plain and simple, 95.88. That's the 618. Nothing fancy. Nothing fancy. Add to that 96.71, which is why I quoted that by accident that you see right here, just to clear things up, is actually the monthly and yearly objective open. So it can get more clear than this as far as the levels are concerned. Now, this thing has also maintained its entire monthly opening range. If you count that opening range low, I guess that's on the 16th. It's kind of stretching it. You haven't really broken any type of range, and you're sitting on the monthly and yearly open. This thing's got to give. Okay, and I think this is where we get some clarity on euro as well. If this downside gives out, here are the targets, 96.40. Whoa, wait a minute. 96.40 also is the close low. It's also the 764 retracement of the advance. It's also slope support. If this pitchfork is in play, and like I told you yesterday, we don't have enough information necessarily, in my humble opinion, to suggest that this pitchfork is in play. That said, the lower parallel converges on a level that we're looking at of lateral significance on the daily chart, a Fibonacci significance on the near-term chart. It's a level to watch. 96.40 is the breakdown zone. That said, you know, if this thing rebounds, as I said last night, look for failure ahead of 97. You got a decent play on that already. So here's what it looked like last night. Here's the rebound. You got as high as 96, 94, and then it failed. Here's a secondary attempt. Let's see if we can't get through it here to the US Open. Again, near-term targets 96.57. Don't go crazy there because it's the weekly opening range lows as well. So I wanted to kind of highlight that zone, 618 of the advance. Look for a reaction there. Downside break, 96.40 is the real player in my mind. Levels unchanged. Questions, comments, concerns on Swissy? All right. Aussie looks like this. And here's what good old Aussie looked like as we were covering it here. Last update was back here on the 21st. You know, we were just coming and tempting another break below 68.51. The game plan for this has been unchanged for a while. Although I'm not gonna lie, it's been frustrating because you know, you kind of want to see Aussie hold support. Here's the level. I'm frustrated because I'm not in it. Just for you guys and for your information, this is something I've been watching for a while. I've been telling you guys to watch for swing low. If that was it yesterday, again, I kind of missed my shot. But here's the daily chart, right? Maybe I was a little too stubborn. I kind of wanted to see that once we saw that weakness below 68.51, I really wanted to see kind of a dump into this zone. 618 extension off the high, 618 retracement off the low, nice confluence region, former swing lows, former swing highs galore, okay, all over the place. But this slope was right ahead. Was that it? A near doji at the low? Was that it? I don't know. I think I might have missed it. So momentum holding 40. I mean, there's a lot of hallmarks here, a lot of like indications that, yeah, something might have just kind of turned the tide. We'll see. Here's what it looks like on the intraday chart. Where you're looking for is a break of downslope resistance to even suggest that there's a move here. Okay, here's what the 240 minute looks like. So into the open of the week, if you guys recall, again, previous updates always available for you. This was the close of last week. We were saying look for a break of this upslope. We get it. Okay, possible entries for the long side, right? Well, we broke through 65.81. Slope converged on this later on as we got that new high. So we had a new retracement or extension there, opened it up a little bit to 68.20. Still didn't get that drawdown quite there. So look, weekly opening range highs objective comes in at 68.89. Levels are exactly unchanged as I told you guys the previous night. Top side break there will put you back on pace to 69.27. If we break below 68.09, you're in trouble. Aussie's got a long way down. First target doesn't even come up until 67.50s. So I'm more inclined to look for this thing to find basing. Okay, I'm more inclined to look for weakness to find entries on the long side against some sort of low. Again, from a positioning standpoint, unfortunately, this thing for the week is just mid-range, right? We're right slap in the middle of the weekly range, so don't have much clarity as far as where to attack it from. Levels, again, unfortunately, levels are clean. Momentum is not. Momentum is not. Ideal scenario, again, you're fading weakness, looking for that topside break above 68.90 for a larger rally for 69.27. Questions on Aussie. All right. That is number 6. Let's just hit Kiwi first, and then we'll hit golden dollar yen. Here's New Zealand dollar. A very interesting setup, 0 momentum. So if you're looking for something active right now, you might as well just go watch some paint dry because it'll probably be more exciting. This thing just hasn't been able to find any type of momentum. Here's what it looks like since the start of the week. It's been a chop fest. Ideal scenario, again, you get that, well, the ideal scenario, I guess, to start the week was that you get that drop towards 65, 60s on a washout to kind of get long, or you finally clear downslope resistance and a breach above 65, 66.50 puts you back on pace. Look, here's the daily chart. Like, you need the confirmation for the turn. Here's the weekly chart for Kiwi. I don't have us at like a major support zone. I don't have us at a major inflection zone. All I have here is, just a basic low day close, low day reversal close that we made back here in December on that pullback for that swing. I don't have a trade against a technical level. So for me on this one, like, here's the 120. It needs to be a dump and a false break, maybe a test of the parallel configuration near 65.70s. 65.60 would be the ideal play. And then failure. Or if we make an objective breach of the weekly opening range high, ain't no reason to fight it. 66.25, you're looking for 66.50 and beyond. All right, so that's sort of my issue with Swissy or with Kiwi. There's just no Momo here. It's been really tough. And by the way, all of these parallels that you see here, you might be asking, like, why is that like that? They're derived off of this. I initially was looking at this channel, if you guys remember, and then we broke. I took the same gradient off the high, and it held. It held. Puts the focus on this right now. It's the weekly open, 66.11. Just above that, the weekly opening range high, 66.25. Come on, Kiwi, make a move. Both Euro and Kiwi determined to do absolutely nothing, says Pooja. Yes, I agree with you. I agree with you. I think Euro's coming. Kiwi, though, man, this is super tight range. The man says, good one, Pooja. Okay. So with that said, let's look at something that's been doing nothing that actually has started to move, and that's dollar yen. We'll take this one from the top down. Listen, this is huge, huge. Dollar yen, the fake out, this may be, is definitely, the implications are big. So remember the weekly chart? Remember this old dandelion? Okay. This is ridiculous. This is ridiculous. Dollar yen might lose its abominatory status, quote unquote, just because it's so clean here. Basic slope resistance, guys. It's the same slope we've been following from the 2015, 2017 highs. Got a little messy there in late 2018, but the parallels continue to offer some guidance, resistance all throughout last year. Look what just happened. Now, from a lateral level of significance, the 764, which is 1 minus 236, is 110.50, and the uncovered gap from April 2019 is 111.05. That was the breakout zone, if you guys remember. This was bearish, broader bearish invalidation. But just ahead of that was basic slope. Look at the last 2 weeks. Wow. I'm beside myself when I looked at this morning. I was like, no way. So it's huge, okay? 109.36 on a lateral level, weekly basis, huge resistance, huge resistance, huge resistance. That same zone of support, or that same zone is now support. takes you into 109.36 as support. On the rally, on this entire rally in dollar yen, we pushed higher. There's a rally that basically consisted of some 5.5%, which is huge. That's like a third, 2/3 of last year's entire yearly range. Guess what? Momentum couldn't even break 60. So all of these things suggest that the broader downside trend may in fact still be in play, and you're at trend resistance. This pullback, look for reaction at 109.36. Here's the daily chart. Now I don't have it labeled here on that 109.36 because it's a little bit longer term of a fib and all that stuff. But if we just take a basic retracement off the advance we just made for this year, you get some levels that come in focus. 109.28. All right, give me a couple pips, no problem. It's a basic 38.2 of the advance. Awesome. A former swing low that we made in the pivot last month in December, that gives you 109.18. Watch this zone. All right. Is this a false break of this formation that we've been following from last year's low? Here's the pitchfork. Off the low from June of 2019, the high from August, and the low from that same month, right? Here are the reference points for the question that's being here, which was right here. Median line break at the 75% line. Got a little messy here, but support, resistance at the upper parallel, support, resistance at the upper parallel. False break type of scenario into the open of the year, pop through, and he popped below. This whole thing might be a false break. If today materializes and closes below the objective yearly open from last year, the risk still remains for a deeper cutback here in dollar yen. Here's the intraday. Just trying to look for our last dollar yen update here. Here it is. So that's the daily chart. So just to put things in perspective on how this played out. That was the breakout. That's where we were trading at. Look where this thing peaked. It came right into this slope. We've moved this, by the way. This is just an adjustment to our slope from here to here. So on that update, and we're just testing the upper parallel. Pull back. If this stays below, you got to leave a lot the risk for a deeper cutback here. Again, here's the near term. I'm going to bring this to a 60-minute just to show you conceptually. I was working with this morning. Here's the slope I'm kind of operating off of at this point. A little messy yesterday or earlier in the week on the top side pop, but median line support, pivot along the 75% line, median line break, 25% support, median line resistance seems pretty decent. Now, this would suggest that if you see a downside break below the December open, which is 109.51 here, you should be looking for that drop towards 109.30, which is the level we were talking about on the weekly charts and on the daily charts. Happens to converge on the lower parallel into the close of the week. I love this. Now we got to hold 109.68 though today, guys. That's kind of the stipulation for the whole thing on dollar yen. If we get through 109.68, I don't want to mess with this. But yeah, 109.30 is a big level for me. I know the swing trade, guys, I think our target is 109.10. So don't let this impact the swing trade if you're already in it on that basis. But for anyone who's looking for a new exposure, or if you got in late, or if you got the break below 109.68, whatever the condition is, watch 109.30. Okay, if that gives us a bit of a hang up, you might want to kind of adjust positioning size, maybe even look for a near-term recovery. But that's a big zone for me, is 109.18, 109.30. 109.28 to be exact. Any questions on this one? All right. All right, so that's dollar CAD number 8. Last but not least, just wanted to give you guys a quick update on what's going on with gold. Um, here's what it looks like. There's really not much to write about. Our targets just kind of continue to shift sideways. There's not much by way of volatility here. Look, um, I don't think anyone should be surprised. We've been talking about just conceptually how gold, as of late, has kind of just been a dud. Needs a little bit of an exhaustion washout, in my opinion, still. What would help? Um, some sort of technical indication, maybe an outside day reversal today if we get it. Would necessitate a close below 1550. That would be nice. You had a big old outside day reversal off the highs already, okay, on the 21st, which looked pretty decent to me, but we just haven't gotten much follow through. Ideal scenario, you get another stab lower, okay. It is broadly still in the uptrend, but you can't get excited about buying gold here, in my humble opinion, both because of the standpoint of the positioning of the dollar, which looks like it could take a little bit more of a pullback, um, and because of just the stretch that we made into the start of the year. I kind of want a deeper washout if we can get it. So patience pays, I think, in this kind of trade, specifically on gold. Here are the near-term levels that we've been following. This slope, it's still working, but it's not the most convincing thing right now. Near-term support 1535. If you get the break there, I'm on a 1520 for sure. It's the yearly open, and 1508. Both would be levels of interest for possible long entries if we get it down here. Both of these. But for now, while in this formation, let's call it, while within the weekly opening range, I still think that the broader risk is to sell rallies. If this thing rallies or pushes higher, I still think the broader risk is for a move lower again. Questions on gold. I wish I had a little bit more for you on this one, but listen, the markets take and the markets give. At this point, it's been kind of tight on some of these consolidations, some of these ranges, some of these back and forth, but the longer this lasts, the better the break will be. And don't forget, guys, we are heading into big event risk with the FOMC on tap next week. No one's expecting that they're going to move on rates, but because of all these opinions and disseminating different contradicting commentary we're getting, lower rates, we're probably on hold for the rest of the year, 2 rates cuts might come. It's always going to be a market mover as we see Powell come on stage and kind of try to play both sides. So don't forget that's on tap tomorrow, next week rather, into the close of the month. Maybe some triangle in gold. It needs time. Possibly Puja. I don't like. I mean, I can see where you can kind of try to make that argument, but I don't like using this. I certainly don't like using that. Certainly don't like using this. It's not a clean. It's just not a clean formation for me. I'd rather work with this downslope and just see if it holds on any rallies into this. That a lot's a little bit of a spike even higher than the weekly opening range for now, but man, something's got to give. Something's got to give. All right, and that's everything on my end. Any other questions or trade setups? Feel free to throw them on the message board at this point, guys. Just a quick look at crude prices, which have been in free fall. This one's been also something we've been watching. I just wanted to highlight this because I was laughing my ass off this morning. This is the same slope that we just eyed. You remember last week I was telling you I have no, I just connected made sure that the slope connected the lows here and see if we can get any type of pivots. And look at this thing. Look at this thing. Pivot break, median line resistance, solid, right? Downside break, acceleration, solid. October opening range high, excuse me, is the next downside range, 54.91. Just below that, you have slope. Look for reaction there in crude today. It's pretty amazing stuff. Pete, did you say that before I showed this chart, or did you say that after I showed that? I just saw your message right now. So here's crude, Pete. Let me know if you have any questions on this. So like near-term resistance let me clean up the chart for you. So at this point, near-term resistance, I'll leave that 618. I'm going to bring up the 786. Oh, look at that, right above that 54 level. Beautiful. Pete said at the same time, LOL. Hey, great minds think alike, Pete. Right on, brother. So that's sort of a slope confluence into the close of the week, into the open of next week. I'm still going to leave that marker there for you. Near-term resistance, the opening range low for the week, converges on the median line. That comes in right around 57.70. So those are the levels I'd be working with on the immediate front. You know, heading into 54, you're definitely in trouble. Or I wouldn't say you're in trouble, but you're heading into some big levels. Slope, range highs, Fibonacci considerations. I'm not sure what 53.99 is. But let me find out. The former swing low from September of 2019. Nope. Something like that. This has been just a phenomenal drop here. Some 16% almost, and counting. Here's the weekly chart. All right. Let me clean this up a bit. Trigger break in momentum on the weekly basis. And one thing I want to check out is actually monthly. So this is set to make an outside monthly reversal off of resistance. Okay. What I wanted to check out is the ranges here. Okay, we're on the largest monthly range so far since September, which doesn't say much, but that was a high that was registered and held all the way till the high we just broke. So not as telling. And it's the largest decline on a monthly basis since the drop we made back here in May. Okay, some interesting stats. I'll give you some of these if anything else comes up that's kind of really telling. I don't think we have anything just yet, but look lower. Look lower. Look towards this zone right here. I think that's where you look for the bigger play. Any other questions? All right, well, if that's it, guys, we'll wrap it up here. I hope you guys have an awesome weekend. Stay light if you're on anything longer term positioning because of FOMC next week. Expect the FOMC lull. You think this is bad on some of these trades that we've seen this week, like Tuesday and Wednesday of next week is going to be like a snooze fest, I bet you, in front of FOMC. So use this time to enjoy your weekend, and I will see you bright and early on Monday morning for the free session on daily effects. And then right here on Tuesdays and Thursdays. Going to be a big week into the close of the first month of 2020 trade. Best of luck trading. Have an awesome weekend. I'll see you Monday. Cheers.